Hey folks, today's Sunday, the 27th of March, and yeah, we're just gonna have a look at a couple of markets. I don't want to go through too much anyway. Just the S&P 500 and the ASX 200, and maybe just touch base on the Aussie dollar, I guess, because there's a few things happening there. So um, I'll go to the calendar at the end, but I'll just run through the S&P first. So if you've watched my previous videos, then you've noticed that I've mentioned a few times that the S&P's we're kind of already in that zone where we're looking for that reversal, right? So it's just a matter of getting some confirmation, looking for some confirmation, and we didn't get it last week. But what I've noticed is, the NASDAQ and the IWM are still the leading indicators, right? So they are still bullish, right? And until we see the reversal there, then we can't really, we've got to wait for them. They're the leading markets. If anything's going to happen first, it will be usually in the NASDAQ or the IWM. Once they roll over, generally the S&P and the rest of the market follows. So I'm keeping an eye on that. But want to show you something interesting though. So we finished on Thursday. So on Wednesday, or from Tuesday, we had this the close on Tuesday with this kind of doji kind of candle. That's generally a reversal candle. Not the perfect one that I would look for, but it can be. And then the following day we had some continuation down to the downside, right? We closed below the previous low and the previous close. So it was a initial signal, I guess. But on Thursday, what we wanted to see was more follow-on. So if this followed on and we've got another big red candle or even a small candle, but as long as it closed below the low here and the close there, then we'd be looking at, possibly this could be it. This could be the reversal signal we need. We didn't get that. Well, we did, but then throughout the day, got to keep in mind it was a slow day too, and it was on low volume. Okay, so the volume was quite low. Straight away it's not institutional buying, it's just really mostly retail. But towards the end of the day, probably midnight, the US session, there was a rally back to the top. Now I kind of suspected this might happen. It just doesn't. Markets just don't roll over just that easily. Generally, it does take a bit of time for it. Once it reaches its highs, it can take a bit of time before it actually rolls over. So we had this big push back up. Now, if I go back to the kind of the lower time frames, you'll see kind of what happened. On the 1 hour, you can see this is like a clear bullish sign in the 1 hour. So the last 4 hours of the session. If you go to the 5 minute, it'll show you probably a bit more detail there. But we kind of hit the low there. So this is the bottom end of the candle. We kind of went the low and then floated around a bit. And, then we had the initial push up and then the retracement. And then pretty much from there, it was pretty much, upside momentum. So, but this candle here is, this is what we call a kind of bullish pin bar kind of candle. Right, bullish pin, so that's very bullish. So that tells me that we're going to see some more upside heading into next week. Now, I'm thinking maybe towards the end of the week we might see some kind of reversal, but it's hard to tell until we actually see more price action. So that's that there. So what I expect to see on Tuesday, presuming that we start trading on Tuesday, is we might see a little bit of upside, then a reversal. But then I'd expect to see, as we head into the New York session, I think we're going to see a bit of a push back up. So there will definitely be a retracement from this. If you look at here, I'd expect a little bit more upside. If you look at the 1 hour, a bit more upside, maybe down to maybe test these levels here, and then followed by some kind of reversal. Now, this is what the market tends to do. Like, it tends to fake a lot of people out just to keep people, everyone's kind of expecting a reversal, right? So institutions are going to try and use that to their advantage and kind of whip people out of the market. If they can start pushing the market down, and then a whole bunch of people will assume that that's it. This is where it's going to go down. Get in, and then institutions will push this back up. Now, when they actually stop doing that and actually make the real move is going to be dependent on how much people they can convince that the market's going to go in a particular direction, right? If everyone's thinking this way to the downside, they won't push the market down. So they'll try and get everyone to think that the market's going to keep going up. Okay, so that's how it works. So that's the S&P there. But if you look at if I go back to the daily again, I've kind of highlighted these levels here as being possible levels of to watch for. All right, I don't see this going any higher than 2100 at most, right? But you just never know in this market. There are some signals here, like the reason why I said we might see a reversal early on Monday is mainly because we're kind of retraced and we're kind of heading into that 61% key retracement zone. So I'm thinking we're going to have some kind of retracement. Now, if I look at the RSI, which I won't go into more detail, besides the overbought and oversold conditions that you can use it for, you can use the RSI for a lot of different things. It's not just the overbought, oversold, or looking for divergence. You can really use it to see potential breakouts, right? Identifying particular points in the RSI, and then finding potential breaks, right? So I won't go into it now because it'll take up a fair bit of time. But so you can predict breakouts using that as well. So yeah, that's that with the S&P. Aussie market, as we know, is still in it's been in the bear trend for a while. We had this pattern here that we hit target 1 and 2. I kept a small position just to kind of look for extended, and eventually got stopped out, but it was a good trade. Classic cipher pattern there, reversed on a dime. So you can see here you got the classic doji kind of candle, and then that followed up with a massive bearish candle, and then we had the following day was bearish again. But then you see you have this push back up similar to the S&P that I just showed just then. So we'll see how that goes. But the Aussie market. Now this one's interesting because this one, most people will look at this one and think straight away that this is a bearish signal, and this is simply means that we're going to see some continuation of the downside. I'm going to challenge that and just say that I think we might still see some upside in the Aussie on probably Monday, probably for most of the week. Mainly because this is what the market does. It tends to trick most people, because most people will look at this and automatically assume that this is a lower low close, which tends to indicate a trend change. But if you actually look at the two candles, right? I'm looking at this one here and that one there. The lowest low on this was 5176, I think. Can't really see there. Doesn't show. Can't really see the value here. Anyways, this candle did not close. This candle closed 5096, and the low is a 5075. All right. This candle, however, closed on 5094, which is a lower close than that close, right? But it's still closed above this one, closed above this low, right? So this low, so it still doesn't meet that criteria. This one meets it. So the lower low here, was lower than this, but this one didn't close. 5078 right there before, and this one was a 5077. Right, so we're looking at, this is still technically a continuation. So we're still looking at some continuation to the upside. So this is a bit of a trick that the market tends to do, where and I got caught out too. So I just wanted to double check, and it turned out to be correct. So, but yeah, so we should see some upside. Again, this is low volume. All week was pretty much low volume. But I've got this bearish bat pattern here with a completion at 5283, so that's a good level to put a short in, and stops would go probably at 5373, and targets would be based on the default bat pattern targets. So see how we go from there. But really wouldn't think there would be much upside from here. You know, even if I draw this little trend line there, you know, we've kind of gone over a bit. So yeah, so we'll see what happens, but I don't think we're going to see much upside anymore from that. Aussie dollar. Now, Aussie dollar's been on a massive rally. It's gone a bit much further than I would have thought it would. I'm still maintaining that we're going to see, you know, new lows. You know, so just got to be careful. A lot of people getting a bit excited that, you know, we could see 80 cents, 90 cents again, but I don't know. Maybe we can. I don't know. But for now, this is overextended, and this is going to need a pullback, which it already has been over the last couple of days. The question is going to be: so is this going to be a retracement, or we're going to see a lot more than that? So, and I'm looking at the rest of the markets, right? The US dollar, I expect to gain some momentum to the upside. So we could see more weakness in, you know, all the other currencies against the USD. The other thing is that commodities are starting to kind of reverse and go back up again. So if that's the case, then we might the Aussie dollar might actually stand out and actually might see some continuation. So we'll have to see how it goes. But I'd be very careful of buying Aussie dollar right now. Just, you know, we're in a kind of a very these are not the times to kind of enter on a hunch, right? You gotta be really. You need to enter at levels where you're risking the absolute minimum for at least a reward that's equal to your risk, right? So just to be careful with that side of things. But oh yeah, one other thing also is usually what I like to do is I usually like to check the pound Aussie, so because they trade completely inversely to each other, so literally all the time. So generally I like to get some clues on the pound Aussie, and if the pound Aussie looks like it's going to reverse, then it kind of generally gives me some confirmation that you know, that the Aussie dollar might go a particular direction. And looking at this, we're kind of at this structure level, right? This really key structure level here. So that already tells me that we could see some reversal here and continuation on the pound. So if I do a fib retracement, right? You know, we get a retracement down into 50%, which is basically the reverse from here. We expect a continuation to the upside, but if it really falls below that $1.74, then I'd be more concerned. But for now, it looks pretty good. RSI is kind of, you know, in that getting into that zero range, so looking into more bullish side of things. So we'll see how we go. So which means that the Aussie dollar we might see some downside here. And I've already said that we're going to probably see 65 cents. I think I actually had a look at it the other day, and I actually think that maybe probably in the next 6 months we might actually see a lot lower than 65 cents. We might even see 50 cents, 55 cents, maybe even lower than that. So I have to look at it in more detail again, but you know, it doesn't look good at the moment. You got to understand that the Aussie dollar is like all the other currencies, where we're fixed to we're pegged to the US dollar. So so if any issues, you know, if the US dollar starts to see some weakness or see some issues, particularly with all the bad debt that they have, you know, we're in big trouble because, you know, we're fixed to them, we're pegged to them. And secondly, we've got a lot of our debts, you know, you know, I won't get into complexities of it. Once you start converting the different exchange rates over and all that, you know, if the US dollar gets into some serious issues, we're going to end up finding that, you know, we might have $1 billion worth of debt, but it might end up becoming $2 billion. So there's a lot of concern there, and plus the weakness in our dollar too is not going to help, you know. So which is going to be the main cause. So I've actually got some concerns about that, but we'll see how we go from there. Still be early, but yeah. But I think between now and probably December, maybe even sooner than that, maybe between now and November, we're gonna see a lot of big crazy swings. So So yeah, so I'll leave it at that. Um, Anything else, just let me know. Best of luck, and talk to you soon. Cheers.